everyone, good morning. You're watching Buy Now, Sell Now on ET Now, and indeed it is a good morning for all of us on ET Now, because yet again your #1 channel is yet again retaining its stance as India's #1 business news channel with a commanding 61% market share. So here's once again us thanking all our viewers for giving us such a huge and prime position on their television sets. Thank you, viewers, and I hope you continue placing your trust and faith in ET Now in bringing you the best news and most unbiased analysis. Okay, but let's of course continue doing what we do best, and that is breaking big exclusive stories to you. My colleague Ruchi Bhatia joins us right now on the phone line, and Ruchi, we are looking at some more IPOs after the railway company IPOs. All of this, of course, in the government's quest to bring in the divestment money. So what companies are we looking at, and how soon?
Absolutely. In fact, Mubina, we already know that the government is hitting the market with an IPO of IRCTC. Thereafter, the government is laying the groundwork, preparing the groundwork for 2 more IPOs of railway companies. In fact, I'm given to understand that DIPAM, that is Department of Investment and Public Asset Management, along with Railways Ministry, are in advanced talks for the IPO of 2 more rail companies, that is RailTel as well as IRFC, that is the Railway Finance Company. I'm given to understand that the government is going to look to divest about 15% stake in both RailTel as well as IRFC in FY20. The groundwork for the same has already been laid, and the government is looking to garner around 1,500 crore rupees through the IPOs of these 2 companies as well. As we've been telling you on ET Now, that this year the government's prime task is to ensure that they're able to garner over 1 lakh crore rupees from this investment proceeds, and the move will aid the government in a long way to achieve that target.
All right. Thanks a lot, Ruchi, for that. For now, of course, we have our eyes out on the IRCTC IPO, but it looks like there may be some more IPOs coming our way from the government. Okay, well, let's now kickstart the show and talk about the equity markets, where we are seeing a big bounce of buying coming in. The Nifty is higher by 40 points, pardon me. Sensex is gaining almost 450 points. Mid-cap and small-cap indices, while they're in the green, they're not exactly, performing as well as the benchmarks are. But earlier in the day, Milind Karmarkar, head of equity with Dalal and Broacha Stockbroking, said to ET Now that the government reforms will definitely boost the manufacturing sector, and he remains bullish on consumption over the long term and even on white goods. Listen in.
So one has to look at, is the environment changing? So yes, the government has put in its effort to change the environment by reducing taxes on manufacturing. That's the first step according to me. And this will definitely push manufacturing. If you see Mr. Modi's address on the 15th of August, he talked about tourism. I think that's it can be a huge a huge space where a lot of employment can be generated. You need to restructure as of now and then move up. So that is what will happen. I'm sure jobs will be created. Coming back to the demand in consumers, it's all about increasing per capita income. So between 2010 and 2019, our per capita income has gone up roughly 2 times, from $1,000 to about $2,000. If you go to see anecdotal evidence, if you see Malaysia, Singapore, Thailand, even Japan, Mexico as well, one sees that once the $2,000 limit is crossed, within 7 to 12 years, the per capita income goes up more than 3 times. So if that is going to happen in India, why worry? If you see electricity reaching every home, so that's a big opportunity, because if you go back and see in the United States, around 1946, the electricity penetration was about 47%. It went, by 1970, it went up to 100%. The AC sales in US went up from 45,000 per year to 2 million per year. In India, in rural India, you may not find refrigerators and ACs. AC sale, typically, it has gone down significantly. But the opportunity is massive. So that will continue to grow. So it has happened in the past, it will happen again. If you see in history, these companies have done very well. So typically if you believe that India will grow at, let's say, a compounded growth of 8%, add 4% inflation, so 12% nominal growth over a longer period of time, these companies can definitely grow at about 50% higher. So now what I'm saying is that what I believe in rather, that the per capita income will increase rapidly, and that is the reason why I'm positive on all these companies to deliver higher. It's a cliche now, which is the demographic dividend as they call it. But during the demographic dividend period, countries can grow in the initial phases, countries can grow sometime in double digit, and that's real growth. Add to that inflation and it becomes very high. So that can happen in India, and I think the only thing is that yes, government needs to put some things in perspective, and they're doing it already. Autos will revive, but whether they will deliver the kind of growth they have been delivering earlier, I have my doubts there. Most of them in a short span of time, or let's say couple of years, once the demand revives, they may go back to their original prices. But whether they will be consistent compounders, I have my doubt. I would rather bet on white goods.
Let's kickstart market Fatafat. Then we have my colleagues from the research desk joining in, as well as Mandar Jamsundekar from Precision Technical Analysis. First up, we'll be addressing the stock of Concor, which is one of the stocks that we're tracking in trade today. Citi has come out with an interesting note on the company. They have maintained their buy rating. Target given by them is 621 rupees a share. Clarity on strategic divestment could lead to a re-rating of the counter is what Citi believes, and they also say that Concor can be an attractive candidate from an acquisition standpoint as well, and that's why they've given it a thumbs up. The stock is up 2% in trade. Mandar, let's talk about Nifty Bank. We're witnessing a very, very sharp up move there. Once again, it has rebounded after yesterday, or after a couple of days of selling off. Can you tell us what exactly do you expect going forward?
Yeah, good morning. See, I expect this trend to continue in the Nifty Bank. Now today is expiry day, and therefore quite possibly the Bank Nifty could trade at current levels around the 30,300 level. But on the downside, 30,200 and 29,000 is a support level for now. On the upside, 30,500 and 30,800 is a resistance. So quite possibly it could trade in this range for the next 1 week. But yes, the undercurrent will be positive. So on dips down to 29,500, 29,000, it will attract buying support.
All right, Soumya, meantime, OMCs are on a tear today as well. What's that Goldman Sachs upgrade? What essentially does it say?
Well, this one's really optimistic for the entire OMCs, be it BPCL, HPCL and IOC. We are seeing the brokerage actually upgrading HPCL and IOC to a buy with target prices of 370 rupees per share for HPCL and 175 per share for IOC. They've also indeed upgraded BPCL to neutral with a target price of 525 rupees per share, and this is on back of the fuel retailing margins that they assume would and expect that they would inch up from here on, and would keep all these stocks and these companies in good stead ahead.
All right, moving on from OMCs to banking. Axis Bank is also on our radar. Varun, the QIP has been completed?
Yeah, Karanya, the QIP has been successfully completed at a price of 629 rupees. This implies a 4.91% discount to the floor price of 661. Now, the issue was oversubscribed. The dilution in equity will be around 7%. The EPS dilution will be around 4%. And the book value per share should go up around 5 to 8%. So that'll add 200 bips to the CET1 ratio, which is good for the bank. And the tax cut benefits will be offset by higher provisions going forward.
There you go. Axis Bank is up 2% in trade. Meantime, Indigo Aviation, or rather Interglobe Aviation, is also in focus. It's up 3% in trade. Morgan Stanley has come out with an optimistic note on the company. They have maintained their overweight stance with a target of 2,261 rupees per share. They say healthy fair environment in India is something that's keeping them overweight on the prospects of the company. They see strong earnings growth as well over FY20 and FY21, and hence giving the stock a thumbs up in trade. Moving on to stock number 6, Mandar, another name from the banking index. ICICI Bank is something that we're tracking. It's the top gainer on the benchmark Nifty index today. How do you see it go from here on? Okay, I think we need to repatch Mandar because his audio has a tad bit of a glitch, but he says the short-term range between 420 and 450 is something that traders and investors should look at, and the long-term trend remains to be optimistic. Meantime, stock number 7 from the metal space, Moil, is seeing a decent amount of an uptick today. Soumya, what's the upgrade? Who is the upgrade from, and what does it say?
HSBC has upgraded Moil to a buy stance with a target price of 180 rupees per share. Well, they believe, despite that the fact that the magnesium prices could decline further, the impact on Moil should be buffered, and in fact they believe that the Indian magnesium demand is to be underpinned by relatively better fundamentals. Also, they say that the low cost of operations would aid margins for Moil, and there is limited downside from here on, and hence they're overall very optimistic as far as the overall outlook is concerned for Moil, and hence the upgrade to buy, and the stock's definitely reacting and to it sharply, gaining close to about 6% today.
Right, that's Moil for you, which is up on back of an upgrade. But let's talk about a stock that's looking weak on back of a downgrade, and it's Jubilant FoodWorks. Varun, what does the downgrade state?
The Credit Suisse has downgraded Jubilant FoodWorks with a target to underperform from its previously neutral rating and a target price of 1,200 rupees. Now, QSR tends to have the highest correlation with macro conditions, and obviously with macro conditions not being that favorable, same-store sales growth, which is SSG, is expected to continue declining into second half of this year. Now, consumption growth also remains weak, and there's a cut expected in the EBITDA margins of around 100 bips. So all this is going to react in downward pressure on the stock today.
All right, that's Jubilant for you, down nearly 4% in trade. Let's also talk about a stock from the paper universe. JK Paper is something that we're tracking. The stock has seen a very, very strong up move today. It's up 4.5%. But in the last 1 month, the stock has seen a very, very smart rally. But today, it is something that we're focusing on back of that fabulous up move that the counter has been witnessing over the last couple of days. Moving on to stock number 10, Mandar, Escorts is on your radar.
Yes, Escorts has managed to show strength in the last few days. So after making lows around that level of 440, the stock has smartly bounced to the current highs of 650, 660. So last 2 days have been consolidation, but today again in the intraday trade, the stock has managed to show strength, 2.5% up in the intraday trade today. I think the stock has got more strength and can see some more upsides. 560, 570 is a support which should be watched for now, and I think the positive undercurrent is going to continue.
Okay, that's the word coming in on Escorts, which is up 2.6% as we speak. But Mandar says that the undercurrent is likely to continue. Let's pull up the Rise with India small case index as well to check the levels it's perched at today. It's up about 0.2% at 552 levels. Not a bad uptick, but yes, definitely compared to the market mood, it is a tad bit a bit of an underperformer today. All right, before we get into break, here's a quick programming reminder on ET Now. We get you the Rise with India prime time every day from 7 p.m. from 5 p.m. to 7 p.m. But on the 5 p.m. wheel, we help you manage your own money. It's been a month since you filed your income tax return, but have you checked whether it has been processed or not? Listen in to get your tax guide.
When you file a return, it's basically a suo motu declaration of the income and calculation of the computation of the taxes and the payment relating to the taxes. 143.1 basically is processing of the return by the income tax department. Now they have already formulated a central processing center, that is CPC, which processes the return based on the information which is filed in the return of income. And also they have information available from various other sources like AIR reporting, which has done 26 AS statements, so that they can match and see that whether the income which is reported is accurate. There are TDS returns which are filed by employers. So all those verifications are done while processing the return, and in case if there is any discrepancy, the statement will show a difference between the income as returned and as processed by CPC. So now Income Tax Department is very active, and the intimation is released online. So wherever the e-filing is mandatory, and which is mandatory in almost all the cases. So you will get the intimation through an email on the registered email ID which is there, and also you get a SMS so that you can track down your email ID, because many people may not be checking their email regularly. Alternatively, what you can also do is you can log into your income tax login ID on the income tax website and check what is the status of the return which is filed, because once it is processed, you can even download the statement from your profile.
So basically put, Siddharth, should our viewers be worried if they do not get this intimation under section 143(1), or they have that acknowledgement that enough is proof that yes, you have filed your income tax return?
Yes, so I would split it into two scenarios. One where there is no refund. In that cases, people should not worry, because if there is no intimation, that means whatever it has been filed has been accepted. However, generally intimation is received, because once the return is processed, automatically the intimation is generated and that is communicated. In case of refund, yes, people should be cautious about it, because unless the return is processed, the refund cannot be processed. So that is one thing where people need to track down, that in case if it is not processed, what is the position. You can also approach your assessing officer subsequently. However, I think there is an ample time period. There is the processing of return under 143(1) can be done after or within the period of 1 year from the end of the financial year in which return has been filed. So to make it in simple terms, if you have filed your return on 31st of August 2019, the time limit for processing the return and issuing an intimation under 143(1) is up to March 2021.
Welcome back. You're still watching Market Fatafat right here on ET Now. Let's get on board with the rest of the stocks that we are focusing on today. And Maruti once again continues to be in the limelight. Soumya, what's the update?
Well, this one has passed on the corporate tax gains that it had received, and they'll be slashing close to about 5,000 rupees prices for their models, and this is applicable on select models, and this in fact is definitely keeping the stock in focus today. In fact, yesterday also we had the stock in focus on back of RCB saying that, or RC Bhargav saying that we'll actually see a lot of pickup in the sales for the month of September. So this one's definitely gaining for the past few days.
Okay, that's the update on Maruti then. Moving on to stock number 12, GSK Pharma. Some negative news flow there, Varun?
Yeah, Karanya. So we actually flagged this off yesterday as we heard the US FDA had raised an issue regarding carcinogens found in this product. Well, now the official recalls have begun for any ranitidine-based drugs. So the first brand which is majorly affected is Zintac, and there's been a recall of 150 mg and 300 mg tablets. Now, this is made in India. The API is sourced from two Indian companies, SMS Life Sciences and Sarkara Laboratories in Hyderabad. So the license for these API manufacturers is now also under question. I don't know how much of a percentage of sales it forms for GSK Pharma, but I imagine it to be quite large.
Well, that's GSK Pharma for you, clearly reacting to that news update. With that, we're completely out of time on this edition of Market Fatafat, so we're going to wrap it up. Thank you, Soumya, Varun and Mandar for joining in.